Welcome to this week's online lecture in International Data Analytics. Today we are going to talk about AI application in business. I'm excited to share with you some cutting-edge AI applications in the banking, financial service, and the insurance sector. Those insights are drawn from both my practical industry experience and my latest research at Greenwich University. Before we dive in, please allow me to briefly introduce myself. Prior to joining University of Greenwich, I worked in the banking and financial service industry for 17 years. My career began as a data analyst at one of the largest financial service providers in the UK. Over time, I gained extensive experience in leverage AI and data analytics to drive strategic decision-making in the sector. At the university, I also supervise data science and machine learning students in the School of Mathematics and Computer Science. This academic role allowed me to bridge the gap between the theoretical research and real-world industry applications. Today, I hope to provide you with valuable insight that blend my academic research with my industry expertise. For those of you pursuing careers in data analytics, my career journey might offer some inspirations and guidance to you. Let's get started. The learning output today. By the end of this video, you will be able to learn important relationship between AI data and data analytics. You will see real-world AI applications in banking and finance. And you will learn AI skills for prepare your data analytical career. In today's lecture, we will cover the following key topics. In part 1 and part 2, I will explain the relationship between AI, data analytics, and data science. Understanding those connections will help you build confidence in the subject and its practical applications. Next, I will provide an overview of current market trend in AI applications, with a particular focus on UK banking, financial services, and the insurance sector, BFSI sector. Following that, I will present a real-world AI application drawn from my work at Nationwide to illustrate how AI is being implemented in practice. We will then take a deeper dive into the latest developments in deep learning models within the sector, explore emerging trends, and discuss the future of AI in the sector. Lastly, I will examine how AI applications have transformed the investment banking industry, particularly their impact on the job market. I will also share practical advice on developing AI skills that could enhance your career perspectives. Well, as you all know, we have experienced a massive surge of AI applications in all industries in recent years, particularly with arrival the models like ChatGPT and the latest advancements such as China's DeepSeek. Before we dive deeper, let's firstly establish the boundaries of key concepts within this field. So as you can see from the graph, machine learning is part of the AI. And what is machine learning? Machine learning is a branch of AI that enables computers to learn from data and make predictions or decisions without being explicitly programmed. And within the machine learning, there's a deep learning. So deep learning, what is deep learning? deep learning is a specialized subset of machine learning that utilizes artificial neural networks to progress and learn from vast amount of data and mimicking the way the human brain learning, which laid the foundation for the current ChatGPT type of AI modeling. So as you know, two of the British-based scientists won the Nobel Prize last year. Geoffrey Hinton, also known as the godfather of AI, and Demis Haspel, the co-founder and CEO of DeepMind, and they were awarded the 2004 Nobel Prize. And what they did is actually their research is really about machine learning using neural network model. So they laid the foundation for the AI development. And in my view, AI is fundamentally about understanding and leverage data. The more effectively we analyze and interpret data, the more powerful and transformative AI applications become. Today, we will explore how those technologies are reshaping industries and driving innovation. I think it's important for you to understand the dynamics or the connections between data, data analytics, and data science. So, as you all know, there is a new type of data emerging. And it's a so-called unstructured data, the text data. And these days we have all type of data. So you have social media, you have website, you have your geographic data, you have, all sort of unstructured data. They are not numeric data, they are unstructured. And today's data is everywhere, generated by nearly every human action. For example, as a student, take your journey to university as an example. Every step you take leave a digital footprint from tapping your Oyster card on public transport to using your student ID for campus access. Those interactions generate vast amount of data. However, it is not the data itself that hold the value, but the insight derived from its analysis. The ability to extract meaningful patterns and actionable insights is what truly make data powerful. So congratulations, as a student of international data analytics, you are equipped with the right tools and mindset to navigate this data-driven world. And one key distinction to understand is the difference between data analytics and data science. The main difference lies in programming. As a data analytics student, you are not necessarily expected to learn programming. However, AI-driven applications increasingly require programming skills to implement advanced models and automate process. I will revisit this point later, but it is important to recognize that while traditional data analytics focus on interpreting existing data, the rise of AI is pushing the industry towards more technical and automated solutions. Developing a basic understanding of programming will enhance your ability to leverage AI tools effectively in the job market. Let me present you with the current trend in the BFSI sector. So worldwide, in 2024, last year, the banking, financial service, and insurance sector hold the second largest market share in machine learning applications, account for 20% of total market share. The leading sector is healthcare, which represents 25% of the market. Together, those two sectors make up 45% of the global machine learning market, nearly half of all AI-driven applications. The graph below shows AI applications in the UK financial service sector. So AI adoption grew significantly over recent years. In 2019, 67% of financial service firms reporting using or developing AI. By 2022, this figure rose to 72%. And according to the latest Bank of England research published in November last year, AI adoption has further increased to 75%. Now, interestingly, AI adoption varies significantly across different segments within the sector, within the industry. The insurance sector lead the way with 95% of insurance firms employing AI technologies, closely followed by international banking institutions at 94%. In contrast, financial market infrastructure firms, such as stock exchanges, have the lowest adoption rate at 57%. Those trends highlights the increasing reliance on AI-driven technologies across the financial sector, shaping the future of banking, insurance, and investment services. The next challenge lies in how to navigate AI governance, regulatory compliance, and the ethical use of those powerful technologies. The banking, financial service, and insurance sector, BFSI sector, has a long history of using quantitative modeling as a powerful tools. The UK financial service industry is highly innovative in this regard. One notable example comes from my own experience at Nationwide Building Society, where I worked for many years. For those unfamiliar with Nationwide, it is one of the largest financial service provider in the UK, offering a comprehensive range of products, including savings accounts, foreign exchange services, credit card, and both secured and unsecured lendings. Nationwide is also the second largest mortgage lender in the UK. So as shown on the top chart, well, this is the data based in 2021 figure. And it is important to notice that last year in 2024, Nationwide acquired Virgin Money, which was previously ranked number 8 in the mortgage market. This acquisition has significantly expanded Nationwide's market share, bring it closer to the Lloyds Banking Group, the current market leader. During my time at Nationwide, I played a key role in developing its first intelligent modeling system, which enabled models to communicate with each other, a groundbreaking innovation at the time. As shown in the graph below, when I joined Nationwide, they have separate models for each business lines. So you have mortgage models, savings models, treasury models, and they're not necessarily linked to each other. So I and my business modeling team created a system which let the models talk to each other. And for example, in the past, if the CEO wants to see the impact of rising base rate on our product, he will need do a lot of research, see a lot of report. After we create this modeling system, he only need to push the button. The system will automate the process and give him the report in seconds rather than weeks. Now, this advanced modeling system become an invaluable tool for the senior management at Nationwide, enhancing decision-making process and providing data-driven insight to guide business strategy. Now, this example underscore how quantitative model and AI-driven analytics are shaping the financial service industry. As AI continue to evolve, we can expect even more sophisticated and automated decision-making system emerge, further revolutionize the sector. Now we're going to deep a bit further to look at the technical side of the deep learning models. There are many different types of deep learning models, with some of the most common being CNN, RNN, LSTM. So CNN is widely used for image recognition and computer vision tasks. RNN is designed for sequential data processing, such as natural language processing, NLP. LSTM, for example, is stands for short-term memory. So it's a specialized type of RNN that overcome short-term memory limitations, making it more effective for time series forecasting and speech recognition. And those models are different in the way they've been trained by the different type of data and algorithm they used. However, they all under the category of neural network models, which require large data set to train them effectively. And the neural network model is really start booming in the last sort of 10, 15 years. I remember when I was, doing my PhD, that was about 20 years ago, when we studied neural network model, our supervisor told us this is like a black box nature, very difficult to interpret. And really nobody interested in this type of model at that time. But currently, it is really this type of model start lead the market. So the graph below shows the relationship between data size and model selection. On the left-hand side of the model selection, you can see this is a model-driven, smaller data size model. On the right-hand side is a large data set, so data-driven model. So the traditional model-driven approach requires smaller data set, but rely on well-defined theoretical frameworks, making them easy to interpret. In contrast, data-driven models, such as deep learning models, require vast amount of data for training, but often operate as a black box model, making interpretation challenging. While model-driven approach offer greater explanatory, they may lack the ability to use data-driven models, which can automatically learn patterns from large data set. So the key challenge in AI research is really balancing data requirement, model performance, and interpretability to ensure reliable and transparent AI applications. Now, deep learning models are becoming increasingly popular in their application for banking and finance sector. Some of them are really proved to be more accurate in forecasting than the traditional models. Some of them can be jointly used to support the traditional modeling system. Now, as you can see from the graph from this chart, deep learning models is in many applications in algorithm trading, in risk management. So no wonder, as one of the leading investment banker from UBS said, we are a team of investment bankers who are also data scientists. So you really need to learn the skills and not only to use the industry experience, but also understand the data science subject. So which of the area of those sectors have most increased applications of deep learning models? I will review the answer in the following slide. As you can see from this graph, in 2022, the top 5 machine learning applications in the banking and finance are financial text mining, algorithm trading, risk assessment, financial sentiment analysis, and portfolio management. Among these, financial text mining has led the surge in AI application within the sector. This trend is unsurprising. As we discussed earlier, one of the most powerful capabilities of AI is its ability to progress and analyze unstructured data. For example, text message. The emerging trend in the industry is growing on unstructured data, such as text, graph, image, and sound audio, such, to improve financial modeling and decision making. This shift is closely related to financial sentiment analysis, which interpret market reactions to news and public sentiment. For example, a few days ago, when the news broke that BYD, the Chinese electric car manufacturer, had developed a faster charging facility capable of charging a car in just 5 minutes, the Tesla share price immediately dropped. Now, in this case, there's no direct financial data involved, yet the market responds based on purely on sentiment-driven analysis. So, as the technology advances and the nature of the financial data is evolving, traditionally, financial analysts rely heavily on structured data such as historical prices, earning report, and balance sheets. However, today, text, image, and even sentiment play an increasing crucial role in financial decision making. As highlighted in the previous slide, one of the fast-growing area in deep learning application is in trading. Now, London remains the largest hub for foreign exchange trading. It is you might not know the world's largest market is in London rather than in New York. London accounting for 43.1% of the global market, compared to the United States, which holds 16.5% market share, and show in the top chart. Now, when we think about AI applications, robot traders, much like human traders, have the capacity to learn, develop successful trading strategies for long-term reward. Now, the graph below shows that the forecast made by a robot trader actually better than human made. This is research done in 2017. Now, due to time constraints, we will not dive deeply into the technical details. However, I encourage you to explore this subject further at your convenience. So, as a summary, really, AI revolution disrupted the investment banking business. And the automation is accelerating with all the superpower computers. The AI is efficient, accurate, which provide long-term financial benefit. So there is obviously fear of the job losses because really it just replaced a lot of jobs. And just yesterday, Morgan Stanley announced plan to cut about 2,000 employees this month. According to the source familiar with this matter, those job cuts will affect various divisions of firm. Excluding its 15,000 financial advisors. A small proportion of these reductions reflect the increased impact of AI and automation within the firm. However, one source noted that AI-driven automation will play an even greater role in job reduction in the coming years. Now, there's also good news. Some jobs will be advertised, and some financial institutions actively recruiting AI talent to fill new and emerging roles. So, as said by Jamie Dimon, the CEO of JP Morgan, AI could have social consequence that rival, the things like printing press, the internet, and electricity. The impact of it is so big. The question what we ask is, what are the skills that the banking finance employee are looking for? And I think companies, from all the research or the job we've done before, the company really is thinking for candidates with strong data analytical abilities and some programming skills that enable them to leverage AI tools effectively. So as AI continue to transform the industry, professionals who can interpret data, build predictive models, and automate process will be highly valued. Next time, I will be introducing the state-of-art AI programming language for data analytics, namely Python and R. Goodbye for now, and see you next week.